I know it's been a while since I made a video. I hurt my nose. Welcome back to Recap Crypto. I'm Joey Pepperoni. Let's recap that crypto. This is not a test. This is an emergency market update. Moonrats, we need everybody to assemble now. If you go back and you watch my Recap Crypto videos that I made a few months ago, you'll know that every prediction that I made is coming true, and it came true. Right now, we have a global catastrophe happening. This is the beginning of the Great Depression. What was some of my predictions that I made? I said that the stock market would be crashing in September, and that's what's happening right now. But this is only the beginning. This is nothing. Yes, some might say that the crypto is also crashing too, but that's not what's going to happen. Let me explain what's actually happening. Yesterday, the stocks tumbled. The Dow fell more than 970 points. This is because the Chinese property giant Evergrande is on the brink of default. Evergrande has 30 billion in assets and 300 billion in liabilities, 80 million of which is due this week. But they have already stated that they cannot pay this interest. Much like 2008, the real estate market in China is highly levered, and it's in an extreme bubble. This is because the Chinese government imposed strict limits on who can invest in certain types of assets, mostly equities, but lifted almost all restrictions on real estate and the housing market. Many of the middle class started investing in investment properties, and as demand grew, so did the prices. The problem was Evergrande used the increases in the price of land and began taking out equity on that increase in order to fund more and more real estate deals. And this is the second largest real estate developer. 30% of the Chinese GDP comes from real estate. So yeah, this is a pretty big deal. Now, how does this whole storm in China affect the US markets? Theoretically, it shouldn't. But when Evergrande was raising capital, they did so by selling commercial paper and investment-grade bonds. The buyers of these bonds and CP were large banking and investment institutions. Vanguard, BlackRock, HSBC, Goldman, blah, blah, blah. These institutions then took these bonds, rolled them into mortgage-backed securities, and sold them to anyone who would buy them. Much like 2008, everyone believed that if something happened to Evergrande, that the Chinese government would step in. After all, how would it be conceivable that the CCP would let their second largest real estate developer fail? This is where things started going wrong. Everything was fine until the insiders started getting word of Evergrande's overinflated balance sheet. But once investors started selling out, Evergrande's bonds started taking a nosedive. The international banking institutions didn't want to be left holding the bag, so my guess is that they started deleveraging these toxic assets to any firm willing to buy. How do I know this? Evergrande's investment-grade bonds are now downgraded to junk bonds, and they are trading at 20 cents on the dollar. This became such a big issue, in fact, that these very firms and their executives were in China this weekend to discuss risk management. Right here, as you can see. Last Friday, they met. Now, the ripple effects would most likely be as follows. Banks and institutions will seek to continue to sell toxic investment and decrease their exposure to the real estate sector. The firms that were dumb enough to buy these toxic assets are now left holding the bag. The once investment-grade bonds are now junk, and no one will accept them as collateral, so they get margin called. Firms will all rush to find cash, but the smaller firms will inevitably have to liquidate their long positions in order to remain solvent. This will likely happen in growth stocks and tech stocks with high PE ratios that have continued their bull run since the middle of last year. As these equities start losing their value, other firms with exposure to these US equities will be forced to manage their risk to the downside and sell their positions, thus further driving the price down. This cycle will probably continue until firms have deleveraged, defaulted, or until the Fed decides to buy the toxic assets from these institutions. Much like 2008, the effects of Evergrande's defaulting will likely have huge implications. In a couple of hours, the Chinese markets open. They've been closed the last 2 days for holiday in China. Looks like around 8:30 Central Standard Time, they're gonna open. That's when the Evergrande stuff will hit the fan. You should also know that in order to make more and more money, the Chinese government allowed properties around new developments to be appraised higher than they should have been to ensure that when Evergrande threw up new buildings, those units they sold would go for even higher than that. That's been going on for a while now. This created an artificial high entry point and overinflated the actual value of these assets. Also worth noting is that the smaller property companies also have buildings around Evergrande. The value of these assets is now in question. Evergrande is going to default on their debt payments to banks on the 23rd, this Thursday. They're trying to renegotiate the terms, but we'll see if these institutions are going to want to do that. Inevitably, Evergrande will need to liquidate properties to pay debt. Fire sale. Everything must go. And when that happens, it's going to crash the value of those assets. It will subsequently crash the value of the assets of other builders that have property around Evergrande properties. That will in turn detrimentally affect the price of those stocks, which will detrimentally affect companies invested in those companies, whether it be through holding their bonds or stock. It's a snowball effect once it all gets rolling. One bank/hedge fund is going to get margin called, and they're going to start liquidating equity positions. This will cause a flash crash in stocks, and it's going to further affect the banks that back those hedge funds, tanking the bank's share prices. It's all intertwined. Why did I say that the crypto will boom now? The use case for crypto is growing by the second. People are understanding it more and its use case. They're understanding what it does, how it's used, how it can be used to have a better world for everybody. So when these all crash, the crypto might go down a bit, but everybody will flock to crypto and invest in it because that's the savior. It's the savior that we all need in today's world. We don't need middlemen anymore. We're done with them. The snowball effect can't be stopped. Not at this point. It's going to affect every market on the planet. Just look at the Warren Buffett indicator for the US GDP. It's currently at 239%. The US GDP is 239% overvalued, and it has to come crashing down at some point. Evergrande in China is that catalyst that causes the fall. Bitcoin, crypto will be safe from a global stock market crisis. And remember, El Salvador's adoption of Bitcoin as legal tender will be evidence that the means of exchange functionality that Bitcoin provides. This will spark everybody to invest into crypto once they realize that they need it, since the stock market will be crashed. They've been trying to suppress this for a long time. That's part of the reason why it's also very volatile. They play with us with it. Institutions are messing around with it. That's why you saw the price of Bitcoin skyrocket earlier in the year. Then it went down. Now it's going up, and then it's going down. They're all trying to get in and manipulate it, just like how they do now. The thing is, there's no more middlemen, and we're all waking up to that, and we're done with them. This is why Bitcoin will be the savior for the Great Depression. Be sure to smash that like button and subscribe. Drop a comment below. See you later, Moonrats.